Hi, my name is Jeremy Reef. I'm the owner and founder of Point Wealth Management. Today I'm going to talk to you about the number one tool for tax planning. And it's not Roth, it's not traditional IRAs or 401ks, it's not even life insurance. So most people are like, well, what is it? It's your health savings account. It is one of the most overrated or underrated, overlooked item, and it is an absolute beast of a tool if used properly. And so, I guess first and foremost, what is a health savings account? And it's not like its predecessor, a flex spending account. Flex spending accounts used to be a use it or lose it proposition. So if you save $5,000 into a flex spending account and you only had $1,000 of medical bills that were paid out of pocket, you lost $4,000. So therefore, most people underfunded those or didn't fund them at all because they were worried about potentially being healthy and not having to use medical expenses. So a health savings account is designed that money, whatever you put away or you and your employer put away, that you don't lose it. It rolls forward and will roll forward indefinitely. So whether you're working or retired, that money is there for your medical expenses. So how much money can I put away into a health savings account? If you're married filing joint, you can put away over $7,000 a year, which is a little bit more than what you can put away into your individual IRAs, Roth or traditional. So again, it's an opportunity for you to put away some money. And the other thing is health. We're going to need it. The older we get, the more likely that we're going to have something go wrong and we're going to need some money, and we don't want to necessarily have to take it out of retirement accounts to pay for it, right? So we're going to use it at some point in our lives no matter what. So let's talk about the best opportunity because of a tax perspective. This is the only thing that I know of to invest in, one where you don't pay taxes on it when you earn income. So when you earn income from your employer and you're putting the money away, you never pay taxes on it before it goes into the account. So it goes in tax free. And then as long as you're using it for a qualifying medical expense that follows the HSA rules, that money comes out tax free. So it's the only thing that I know of that you put the money away without paying taxes and you get it money back out without paying taxes. Again, as long as you're following the rules. So it's a pretty sweet deal. And then the last thing is you have the ability to actually invest it. Most people, that's what they don't realize. If a bank is in control of your HSA, they'd say, well, I'm only getting this in interest. It's not growing very quickly. Well, again, if your deductible, say, for example, was $3,000 a year for your health insurance, and you put away $7,000, theoretically, there's going to be $4,000 left at the end of the year if you had a medical expenditure, or maybe there's even more than that because maybe you were healthy that year, right? And say you saved for 30 years and the majority of the time you barely took anything out for your medical expenses. Well, there could be a sizable amount of money there that you have saved. Well, there's other financial institutions that allow you to actually invest that money on more of a traditional sense of things, more like an IRA, Roth IRA, 401k, where you can invest in the more traditional things, stocks, bonds, mutual funds. So it presents that growth opportunity because, again, let's face it, at some point in our lives, we're probably going to need additional money for medical expenses. If we take it from a 401k, a traditional retirement asset, we pay taxes when that money comes out. If we're taking it from a health savings account, no taxes as long as it qualifies for that expenditure. So hope that was some helpful tips in getting you pointed in the right directions, saving for your own retirement, and tax-friendly options. Again, Jeremy Reef, Point Wealth Management. See you on the next video.